Hello, this is Dr. Paul Cottrell, and we are going to analyze the markets for the upcoming trading week. I'm recording this on 8/24/2025. But before we do that analysis, we're going to go over my website, the-studio-reykjavik.com. You can help support the work that I do by sharing the links, asking your social media to follow me. You can help through donations. You can donate on my website. At the bottom of the homepage, you can donate through Stripe, PayPal, or Buy Me a Coffee. You can also be a paid member to my Patreon channel. I do these videos for free. You can also watch live streams on my website under live, under broadcast live. You can watch the Rumble feed or the YouTube feed. You can also listen to previous podcasts in the audio format. So it's a great way to catch up on shows that you've missed. Make sure that you subscribe to all my channels. I have 4 channels on YouTube. I have Brighteon, Bitchute, and Rumble. All the links are in the description of this video and all my videos. In addition, you can purchase the great products that I have on my store. You can purchase the ebooks that I have. I have 8 different ebooks dealing with finance, artificial intelligence, genomics, endocrinology. You can also get the great supplements that I offer. Let's talk about some of them. You can get the structural nanosilver toothpaste, whitens your teeth, freshens your breath, helps reduce inflammation at the gum line. Max 35 is in stock. You take a teaspoon a day, every day, swish it in your mouth, gargle about 20-30 seconds and swallow. This will help with the mucosal barrier, help with the health of your epithelial lining, and improve your oral cavity and oral pharynx. This will help to boost up the immune system. The gel, I have it in a tube form and also in a quick dispenser form. You use the gel in various ways. You can use it as a daily skincare. You can put it on a wound and help to heal that wound. You can use it as an aftershave. If you're not feeling well or people around you are not feeling well, put it on your hands, around your mouth, around your eyes, around your ears, around your nose, lightly coat your nostrils. It stays active for 5.5 hours. So it's prudent for you to have some at work and at home. You never know when you need it, especially during the fall and winter season. The structural nano silver soaps, you can get it in 4 different varieties. You can get it in charcoal tea tree, lemongrass, peppermint, and lavender. Very high quality structural nano silver soaps. I also have drops and lozenges in stock. The lozenges you can get in elderberry zinc in a 21 count, and the drops are smaller than the lozenges, and you can get them in blueberry, honey and lemon, and cherry flavor. I also have cleanse in stock, which is 30 parts per million. It's comparable to the Max 35. Max 35 is 35 parts per million. Again, you take it the same way. Teaspoon a day every day. If you're not feeling well, take a tablespoon or 2 a day and then go back to your maintenance dose once you start feeling better. I also have a multivitamin, the complete multivitamin, very high quality, easy to digest, and it has vitamin A and vitamin C and D3 and E and B1, B2, B3, B6, folate, B12, biotin, iodine, zinc. It has lots of different vitamins that are very important as cofactors for enzymatic activity. So get the complete multivitamin. The multivitamin and probiotics are foundational pieces to the health protocol to help slow down the aging process. C60, very potent antioxidant. You can get it in a 2-ounce, a 4-ounce, or an 8-ounce configuration. It is cheaper to purchase the higher ounce configuration. Now, You can get it in extra virgin olive oil, avocado oil, or MCT coconut oil. Take a teaspoon a day every day. And what this will do is soak up free radicals at the cellular level, also in the vascular level. Now, when it soaks up free radicals, it's going to reduce stress on the cell and in the tissues. So the cell and the tissues will perform better. In addition, by soaking up free radicals, mitochondrial health will improve and you'll have more energy. When you improve your concentrations of ATP, your cells, your tissues, and your body in general will have more energy. So the cellular processes will improve. Now, at the vascular level, when you soak up free radicals, you're reducing the chances of LDL being oxidized, and therefore you are reducing plaque formation. For neurons, it's going to improve the health of the neuron, reduce stress on the neuron, so the myelin sheath of the neuron will be intact. Also, the mitochondria in the neuron will improve. You'll have more ATP to produce the neurotransmitters. So over time, what's going to happen is there's less stress on the neuron, and the neuron will be able to have positive neuroplasticity because it's producing more neurotransmitters. C60 will help with the immune system and the endocrine system. So it is prudent to take this every day, teaspoon a day, to reduce inflammation and to reduce stress, on the cell. That will help for the cell to run more efficiently. Now, by soaking up free radicals, you're going to slow down the aging process. So what you're going to notice is that over like probably a 2.5 month period of taking it every day, a teaspoon a day, you're going to notice your body is performing better. You have more energy. You will be recovering from workouts better. And over a 10 to 12 month period, you're going to start noticing in the mirror a slowing down of the aging process in your skin. Now, how it works for the skin is that C60 is going to soak up those free radicals that are at the basal layer and improve the health of the skin because it's improving the actual cells that are generating new skin cells at the basal layer. So take C60 every day to soak up those free radicals to reduce stress at the cellular and the tissue level. Now, when you are improving your tissues, you're improving your different organ systems. So C60 is a systemic way to soak up free radicals. Very important. I've been taking C60 since 2016. Other supplements that are really important to take are D3. D3 is a cofactor for gene expression. It'll also soak up, or allow you to absorb, I should say, calcium. And it's going to help cells go into apoptosis for ones that are infected. D3 works better when you take magnesium. So make sure you have magnesium in your supplementation. Vitamin C and magnesium will help with your skin, your immune system, and brain function. Magnesium is very important for brain function. Omega-3 helps with your cardiovascular health by bringing down inflammation and helping with your lipid profile. It helps to bring down LDL levels and increase HDL levels. It also helps to prevent red blood cells from overclotting. Ashwagandha root will help to control cortisol levels and blood glucose levels. Super important for cardiovascular health and immune system. Goodnight formula will help you to get into the 5 cycles of REM sleep that you need regularly to slow down the aging process, to consolidate memory, to detoxify your central nervous system, and to be well rested. It is tryptophan, melatonin, GABA, and passion flower. Resveratrol. It's an antioxidant It's going to also help with youthful gene expression, help to get rid of cells that are in senescence. And by soaking up free radicals, you're improving the health of the cells and the mitochondria, so you'll have more energy. I've been taking resveratrol for decades. It stacks well with NAD+, ubiquinol, clarity factor, and C60. Vitamin B complex, super important to take, especially if you're 40 years of age or older. It's going to help with your cellular metabolism. The first four B vitamins helps with the health of the mitochondria, helps with the electron transport chain to generate more ATP, so you'll have more energy. And vitamin B12 helps with neurons. So to protect those neurons and to improve your cellular metabolism and build up energy, take vitamin B complex, super important. Digestive enzyme complex, super important for the health of your pancreas. It helps to break up carbohydrates, proteins, and lipids. Most people, once they turn 40 years of age, will start to have problems with their pancreas. Your pancreas is not going to function as well as it used to when you were younger. So it's important to take supplementation that helps with the digestion and lessens the load on your pancreas. Collagen. Collagen is a multi-purpose supplement that's going to help with the health of your cartilage and your joints, your musculature, your bone health, your skin, your hair, and your nails. Take it every day. It's a powder. Mix it with soft foods, filtered water, a smoothie, or even with milk. But take it every day and make sure you do resistance training. Lignans. It'll help with endocrine system and your immune system, bring down inflammation, and also soak up free radicals. It stacks well with turmeric, ashwagandha, and lignans for cardiovascular health. Magnesium and zinc, super important for immune system and brain function. Take it every day. Clarity factor will help you to focus on tasks. It'll get rid of that brain fog, and over time will help to improve the neuroplasticity so your neurons are well connected. You'll speed up the cognitive function, help with memory, and by doing this on a regular basis, you're improving your brain function. Take it every day. Olive leaf extract will help with the immune system and cardiovascular system. It brings down inflammation and helps with the lipid profile. Zeolite is a great way to detoxify your body. It will bind to heavy metals, toxins, and chemicals. Once it binds to them, you'll be able to urinate it out within about 6 to 8 hours. Take it every day. Take 3 small drops underneath your tongue. Drink filtered water. And do that daily. If you want a heavier detox, take 10 small drops underneath your tongue. Drink the filtered water. Do that every day until the bottle's done. Do that once or twice a year. But it is better to detoxify your body daily. Myotrol, super important if you're 40 years of age or older, to build muscle and to maintain muscle. It will also help the health of the mitochondria. Myotrol will help with the gene expression to build muscle. It stacks well with gladiator barley and boomer boost. Do resistance training regularly and take myotrol. It has flavonoids, polyphenols, and lignans to build muscle. Again, it helps with the gene expression to build muscle. Gladiator barley is very important to take to help build strength and muscle. Stacks well with myotrol, but it will also help to detoxify your body, bring down inflammation, and soak up free radicals through superoxide dismutase. Now, by bringing down inflammation, that helps many different systems. Your vascular system, by bringing down inflammation, you're reducing plaque. By bringing down inflammation at the cerebral level, you're reducing damage to the myelin sheath of neurons. So your neurons are going to be healthier. By reducing inflammation when you work out, you're going to recover quicker. And by reducing inflammation on a regular basis, you're helping your immune system and your endocrine system. Heirloom barley also will detoxify your body, bring down inflammation, and soak up free radicals through superoxide dismutase. What heirloom barley does not do is help you with the strength. Now, when you stack it with Boomer Boost, it will also help with controlling your A1C levels. Now, ubiquinol, super important to take, especially if you're age 40 or older. It's the most bioavailable form of CoQ10 that you can purchase. It's an antioxidant, so it's going to soak up free radicals. It's going to help with the health of the mitochondria. You're going to have more energy, and it's going to help to protect neurons. NAD plus stacks well with ubiquinol. NAD plus is a supplement to boost up your NAD plus levels so you have more energy. You'll be able to repair your DNA damage, including mitochondrial DNA, and NAD plus will help to protect your neurons. Super important to stack it with ubiquinol to help with neural health. Vitamin K2, MK7 is on sale. This is a supplement that will help with bone health. If you stack it with D3 and drink milk or take calcium supplements and do resistance training, you're going to improve the bone density. And when you take D3 and K2 together, it'll also help with your cardiovascular system by reducing calcium depositing and to help pull some of that calcium depositing that's already around plaque formation. Nattokinase will help with your cardiovascular health. It's fibrinolytic, so it's going to break up clots. Nattokinase helps to bring down LDL levels and increase your HDL levels. It stacks well with K2, D3, omega-3. I have two different deodorants. Both are for males or females. You can get it in citrus or peppermint, lavender, and tea tree. It's a dual purpose product. It'll help to detoxify your body, and you're using it as a daily deodorant. It's made from essential oils from the Himalayas. Very high quality ingredients, all natural. No aluminum, no baking soda. So please go to my store and get these very high quality deodorants and help to detoxify your body. And I have several anti-aging boxes and longevity boxes. I'm not going to go into the details, but they are curated in such a way where you will be able to save some money by purchasing the box. For example, the anti-aging deluxe box has the Max 35, C60, vitamin D3, vitamin C and magnesium, toothpaste, the deodorant. You can choose which deodorant you want. C60, you can choose which one you want. The probiotic and resveratrol. So it's a great way to get healthy. So please go to my store, the-studio-reykjavik.com, and take a look at the different anti-aging boxes that I have. They are curated in a way where it's at a lower price compared to purchasing the individual products. I also have longevity boxes that are in stock, and you can take a look at that, like the bone box. Like for example, the bone box has the collagen, the vitamin D3, and the K2. The longevity bone box, or even the immune box. The longevity immune box has lignans, turmeric, and olive leaf extract. So take a look at the different boxes I have and purchase them accordingly. I also have course material that you can purchase on pulmonology and immunology. You get lots of videos, lots of PDF files. Just for $50, you get a unique password, and you can log in with that unique password under classes, and you can watch at your leisure those videos and read those PDFs. So those are many ways that you can help support the work and support your health and wellness. So with that, please go to my store, the-studio-reykjavik.com. Now, I want to start with going over the analysis of the market and how I think trading might be next week. Okay. BITO is a ETF that longs Bitcoin. Now, as of this recording, Bitcoin is trading at approximately 115,000 a token. So BITO is based on longing Bitcoin. It's an ETF that's leveraged. So what we have here is the close of Friday. So we have a resistance level at 21.49. It closed at 21.1. And we have a support level at 20. And then a very strong support level based on the fib sequence of 1855. But the 20 support level is based on some drawdowns on the ETF and then bounce back up. So you can see here is one of them. Another one is approximately here at around 20 where it started to rally and then it came back down. So 20 is a support level near term and a resistance level of 21.49. If it breaks the 21.49 resistance level, then you're talking about the next resistance level is going to be 2250 for the next resistance level. Now, Bitcoin has been going up and down. It was trading at around just above 120, 120,000, and then it came back down to about 112,000, and then jumped back up to 115,000, 116,000, based on the Fed announcement that took place on Friday. Now, the Fed announcement signaled that they were probably going to do at least one rate cut this year. So equities rallied and Bitcoin rallied. And also treasuries. So that means that we should see some price appreciation within BITO and in Bitcoin as we get closer and closer in September to the actual rate cut by the Federal Reserve. So I would suspect that as we're approaching that date, that Bitcoin may trade above 120. Now, the way this ETF works is that if the price moves fast, then the actual ETF price appreciation or depreciation will moves fast too. So you can see here in the candle, the news from Friday was positive for Bitcoin and there was a big candle. Well, most candles are much smaller. So this is the point that I'm making, that is that volatility, as we're getting closer and closer to the actual Fed date of lowering rates, we might see some larger candles here. All right, so that's my take on Bitcoin in the near term. SPY is an ETF that will trade the S&P 500. So I have a target for SPY at about 680 to about 700 for year end. That's my target. It's maxed at, so far the max has been 646, and Friday it closed at 645. When the Federal Reserve actually lowers rates, we're going to probably see us marching towards the 680 mark. Now, let's talk about resistance levels. Right now, the near-term resistance level is 650 for SPY, and there's a support level at approximately 625. Now, there is a strong support level at 607 based on a fib sequence, which is a 23% retracement from the low from the tariff fall and then the march back up. So very strong support level at 607 and a support level at approximately 625. Now, resistance level right now, near term, is 650, waiting for that Fed announcement. Now, the question is, will we break that 650 before the actual Fed lowers rates? Maybe. It's getting close. It's been hovering. You can notice it's been hovering around there. So we'll see. We'll see what will happen, but most likely it will. If it does break the 650 mark before the Fed announcement, then you're talking about it marching up to 680 pretty quickly. Okay, now, so that's the resistance level and the support level at SPY. Oil. Oil futures for WTI have been in a range. Now, remember when we had the conflict in Iran and Israel was bombing, and then the United States was getting involved, and then we started to to bomb them in Iran, the nuclear facilities, and then the market started dropping. So you had the appreciation of oil going to about $78 a barrel, and then it came back down. So it's been hovering above the 65, trading between 68 to 65, and then dropped. So and then the last few days last few sessions have been trading upward. So there's a new trading range. The old trading range was about 68 to about 65. Now the new trading range is about 60 to 65. So I suspect that there is going to be a resistance level at 65 and a support level at 60 for WTI in the near term. Now, if it breaks 65, then you have a new resistance level at 68.50. If it breaks $60 a barrel, then you're talking about a 54.94 support level, strong support level, but I don't think that's going to happen. Oil is an ETF for natural gas. So let's go over natural gas first, and then I'll come back to oil. Natural gas has been, for the last couple months, have been trading in a downward trajectory, especially the last month and a half. It was trading in a range that was around 325 to about, there was a trading range in the three handle. Now it's having a problem. Now notice that this 63% retracement, all right, or I'm sorry, 61% retracement from the all-time high, not the all-time high, but the high of this chart of 4.901. All right. And it started to come back. Wait, was it? Yeah, come back down on this chart based on the 61% retracement of the fib. There's two fib sequences here, but I'm looking at this line right here. You notice that this line was the line where when the market was starting to sell off in March and into April, and then came back up. It bounced off of this 61.80 mark and then started trading in a range, right? And this was that 325 to $4 range that it was trading, and then it started to drop back down. Now, what's interesting here is that it bounced off of the 61.8% retracement and then came up and then started bouncing off of the 23% retracement. You see that? Roughly. So it bounced off, came up, and then it came back down. Now, if you notice, it's having a hard time dropping below that in any significant manner. It's been hovering around, bouncing a little bit up and then coming back down a little bit. But if you average this out, it's been hovering at that 61.8% retracement. So we're looking at approximately above the 2.75 level for that fib sequence. So Friday it was trading at 2.692. Now we're in the summer months and inventory is higher than expected. Demand is less than expected. And so there's a little bit of a pressure in the futures market for natural gas to go down. Now, usually what happens is as it switches over to the fall season and a winter season, that natural gas should go up, especially if you're going to have a cold spell. So the question will be what the temperatures will be this year. If they're going to be warmer, then it's going to be maybe problematic. And what are the inventories? Now, inventories are drawn down by domestic use and also exporting through LNG. So keep that in mind. So natural gas is trading at 2.69 and it is hovering just below the 61.8% retracement. Now, if it breaks, which is possible, then we're looking at probably another support level at about the 2.5 range. And that is supported from this sell-off here and then the march up. And then a major support level at 2.2, which is a 78% retracement. All right, so in short, we're trading around the 61% retracement, so around 2.8. And we have a resistance level at 3 in the near term. We have a support level at 2.5, and if 2.5 breaks, it'll be supported by 2.2. Now, the analysts are thinking that 2.7 is approximate, which is pretty close to the 61% retracement. That 2.7 is near the bottom. So we seem to be at a point where we should be seeing more interest in purchasing natural gas. All right. Now, what's interesting here is if you take a look at, these are your volumes, right? You have volumes. Now, volumes in January, right? Were up, February up, March up, right? And then they started declining in April, May, and stayed kind of relatively low, especially July and August. You can see the volumes have been kind of dropping below the 200 level. So we should see a spike of interest. And if that's the case, then we should be able to get over the 3 level. Now, if we get over the 3 level, the next support level is going to be 3.214 because of that fib sequence. Now, analysts from different investment houses like Goldman Sachs are suggesting that in Q4 and Q1 of next year, so Q4 of this year and Q1 of next year, we should be trading at about 3.7. So it'd be back to about this level here. All right. So I suspect that when interest comes up, now, I mean, kind of like look at what happened last year in November. All right. It went from 2.25 and went back up to 3.7 within 1, 2, so approximately 9 weeks or so. So another dynamic, something similar might happen as of what was happening in late October, early November. So the current trading range, 2.5 is a support level, resistance level 3. And it's going to be fighting this 61.8% retracement, which is approximately about 2.8. Okay, so how does that translate to what's going on with BOIL? BOIL is a leveraged ETF, so it's not one for one. Now, as there is a sell, now this is longing natural gas. As this is selling, as natural gas is selling off, the ETF is going to be selling off too. Now, the low has been 27. Friday's close was 27.11 per share. All right. And we have a resistance level now and a new support level. Now, if natural gas hovers around that 61.8% retracement, which is around 2.8, if it hovers around there, then BOIL is going to be at just below 30. If natural gas starts to go up to $3, once it starts to go up to $3, this is going to surpass the 30. So resistance level 30, support level at 25, but that 30 could break pretty quickly and get to 34.98. So it really depends on how fast natural gas will break $3 million British thermal units. So in the near term, 30 is a resistance level, support level 2.5. If natural gas starts to sell off a little bit, then BOIL will continue to approach 25. If natural gas starts to go up, which it should in October, then we're going to see this should rapidly go up. And it'll go past the 34.98 pretty quickly. You can see here, like in November, when we were looking at October, when natural gas was starting to come up, right? And it started to go up and it took it took 2 months, a little bit more than 2 months to get to 3.7 million, $3.7 per million British thermal units. Well, we can kind of take a look at this chart and go, okay, so November it went up, right? And then it came back down and then it came back up again. So in about 9 months, right, we're talking about the BOIL was at 63.55. So we're looking at, this can go up quick. The point I'm making is this can go up quickly. It just depends on how fast. And if you go back to this chart here in open interest is pretty low right now. And then it should start spiking up in October, late October. You can see it spikes in late October, right? So we should see something happen in late October and then start seeing this march up to 3.75. That takes 2.5 months, 2 months, a little bit more than 2 months, about 9 weeks or so, right? And when we look at BOIL, it was at 109.77. That was in March. Well, that probably is due to the tariff issue and what was going on in Israel. So this part you might need to take with a grain of salt because of the volatility of the market at that time. But this early November going all the way into January dynamic may play out again, is my point. But just in the near term for Boyle, resistance level at 30, support level at 25. But once natural gas starts to break $3, then you're going to see it surpass the 34.98 mark pretty quickly. All right. Now, TYD is a ETF that trades the belly of the treasury curve. It's the 7 to 10 year maturity. Now, as prices go up for the belly of the curve for the treasuries, TYD will go up. If prices go down, then TYD will go down. Now, with treasuries, if the price goes up, the yields go down. If the Federal Reserve lowers rates in September, there is high probability that the belly of the curve is going to start to shift down. So yields are going to go down and prices are going to go up. So TYD, when the Federal Reserve lowers rates, should appreciate. And you sort of are sensing this, and it's hovering at the 25 mark because the Federal Reserve is being baked into the price for expectation of at least a quarter point reduction. All right. Now let's take a look at some of these candles. All right. These candles are relatively small before Friday. Friday had traded at 25.39. But Friday's announcement from the Federal Reserve that they were most likely going to lower rates by a quarter point in September, then the candle was pretty large. All right. So that's one indication. The strange thing is that there wasn't a lot of volume with that trade. So there are still quite a few people on the sidelines here. Now, it's not going to be a big move, I mean, in terms of price, right? So you can have lots of shares of TYD to be able to get that capital appreciation. But the point here is that it's been hovering around this 38% retracement from the high that goes all the way back to September of last year to the low going all the way back to January of this year. So it's retraced. It's been retracing at about 38. So if the yields for the belly of the curve go down, let's say the 10-year goes to 4.1, like right now, as of this recording, I believe the 10-year is trading at 4.26. So if it starts trading at 4.1, you're going to start seeing this start to appreciate. Now, the question is, when the Federal Reserve lowers rates, will the belly of the curve be below 4? If it is, then we are going to most likely hit this 25.87 or 26 range for TYD. So in short, what this basically means is that you have a support level at approximately 25. You have a resistance level at 25.87. And this isn't going to move that much unless there's some sort of event, positive or negative, happens, or the Federal Reserve actually does the rate cut in September. So probably going to be undulating around this 38 for a little while until we get to mid-September. I think it's when the rate cut is suspected. Now, that takes us to this curves. This is a spread between the 30-year and the 10-year. So this is the 30-year yield for US Treasuries. This is the 10-year. this staircase is the federal funds rate, and this curve down at the bottom is the spread between the 30 and the 10. And if you notice that we're at 0.59 for the spread between the 30 and the 10. The 30 is trading at 4.92, and the 10, as of this screenshot, is trading at 4.33. Sometimes I think this chart sometimes lagged from the actual 10-year yield. But the point here is that we have spreads that are widening and that they should be coming in. We know that the Federal Reserve is going to be lowering rates. Now, what happens when the Fed lowers rates? This happened in 2024. Now, when it starts to lower rates, the spread starts to come in and starts to go to 0.2. Now, you can have yields go up and the spread comes in. That means that the 10 starts to go up higher than the 30 and it comes in. So that's curve steepening. All right, that's what is considered curve steepening. So, like, for example, you had yields at approximately, for the 10-year, at above 3.8, right? The Federal Reserve drops the rate, right? And then they're holding, and then the yields start to creep back up, right? And then they drop again, right? And then there's some sort of downward. So it's the point I'm making is that you can have the federal, in theory, in textbook theory, all right, when the Federal Reserve lowers rates, the yield curve should go down. But there are times where it's not, because either fiscal spending is too much or a weakening of the dollar, or there's other dynamics that are in play. It's not always based on the federal funds rate. Now, the federal funds rate is on the front end of the curve. It's more like affecting overnight operations, 30-day, 90-day type stuff. And then over time, it moves up the curve. Now, when the Federal Reserve starts to drop their rate, the spread should start to come down. So one possibility is this, and Bassett has signaled this, that he thinks that when the Federal Reserve fund rate goes down, that he thinks that there's going to be a parallel shift downward for the treasury market. So that would mean that the 10-year is going to go down and the 30-year is going to go down. And if it holds that spreads come in, the 30-year might come in faster than the 10. But typically the belly of the curve moves faster than the end of the curve. So if the federal funds rate based on Bassett is lowered and there's a parallel shift of the downward of the yield curve, then we should see either the 30-year is coming in, the 10-year is coming down, and we still have yield spreads coming in, but not as low as, let's say, 0.2. It may be hovering at 0.4. That might happen. Another thing that might happen is that when the Federal Reserve lowers the rate, yields might go up a little bit over time. See, the federal funds rate went down, but yields started to creep up. But the 10 creeped up faster than the 30, and therefore the spread was less. All right. But that was with some more fiscal spending that was happening. And, worry about inflation and all this stuff, right? And the economy. Right before this, there was a worry about inflation, and then the economy was kind of hovering, not doing so well right before the election, and then all of a sudden the yields started coming back up. So when the Federal Reserve made their statement that they were most likely going to do a 1/4 point rate cut, when they made that announcement on Friday that they'd make that potential move in September or October, the actual yield on the 10 went down. So we have some evidence to suggest that when the Federal Reserve does lower rates, that we should see the 10-year come in and most likely be below the 4.2. It's probably going to be trading it around here, about 4.1. So if that's the case, then we're also going to see some drop in the 30-year to maybe trading below the 4.8 mark. And depending on the speed of that, of which one moves faster, depends on if the spread is going to be coming in, how much the spread will come in. So it'll be interesting to see what will happen as the Fed lowers rates, what happens with the spread, and what happens with the movement of the yields of the bond market. According to Bassett, and based on the news from Friday, it looks like the Treasuries yields will go down. If that's the case, then TYD should go up towards the 25.87 to 26 mark. So we'll have to see on how this evolves. But again, sometimes when the Federal Reserve lowers rates, actually yields go up. But that's based on some other variables. We'll see what happens here. But I suspect that what's going to happen is that when the Federal Reserve lowers rates, equities are going to go up. There's going to be the Federal Reserve is going to be more leaning on employment than inflation to try to stimulate the economy. They're going to be bidding up treasuries, and the yields will go down when they intervene in the market. Now, another way they can intervene in the market is that the quantitative tightening, where they sell their assets into the market. When they sell their assets in the market, normally the yields will go up because there's more supply and they're taking money out of the market. All right. So they're supposedly going to slow down their quantitative tightening. So by slowing down their quantitative tightening, then they are in effect not putting as much supply into the market, treasuries into the market, or mortgage-backed securities in the market. So the yields should be suppressed when they do that. But this is a multiple variable dynamic that's hard to fully see. But the news from Friday suggests that for the 10-year Treasury, we should see lower rates when the Federal Reserve lowers their federal funds rate. But it's not just lowering their federal funds rate. It's understanding what are they doing with their balance sheet in terms of quantitative easing or quantitative tightening. And they're not going to be quantitative easing, but they have been doing operations that are called quantitative tightening, which is they're getting rid of some of their balance sheet and putting it into the market. And when they're doing that, they're taking money out of the market, reducing money supply. And when they're selling those assets in the market, the yields on that debt, the yields on those treasuries or mortgage-backed securities or whatever, the yields on them the interest on them should be going up because there's more of a supply and therefore the price goes down. But I believe that when they're lowering the rate in September, they're not going to increase, and if they're not going to increase quantitative tightening, and I have a feeling that they're actually going to reduce their quantitative tightening. So in effect, that's kind of like quantitative easing, but not necessarily quantitative easing. They're not buying more. They're just not selling as much into the market. And I think this is how they're kind of adjusting the interest rate. The interest rate is going down. The interest rate, this is how they're affecting the end of the curve. The front of the curve, they're lowering the rate. So by lowering the rate, then the front of the curve will go down, right? But in theory, when you're lowering the rate, you're also increasing the chances of inflation. So the dollar, in theory, should be going down. And when that is happening, and there's not fiscal uh, what's the word I'm looking for? Conservative fiscal policy from Congress. When you're lowering the rate and you have more debt being generated, that should in essence be inflationary. So yields should be going up on the back of the curve. Now they can adjust that by saying, well, we're not going to do as much quantitative tightening. No, when they do that, then the yield should be going up. So there's another variable that's involved. There's another variable involved that they're playing around with. By quantitative tightening, all right, let me back up and let me explain it a little bit, maybe a little bit more easier to understand here. So as the Federal Reserve lowers the rate, the front of the curve should go down and it should steepen. Now, if the Federal Reserve wants to control the back of the curve or the belly of the curve through their quantitative easing or quantitative tightening operations, if they sell less quantitative, if they're selling less in the market of their quantitative tightening operations, that means that they're not extinguishing so much of the money supply. If they were putting more of the quantitative tightening in, if they were selling more into the market, then what's gonna happen is that they're extinguishing more of the money supply. But they don't want to do that because they're afraid of the unemployment rates. So they're reducing their quantitative tightening operations. So in effect, what they're doing is not extinguishing money as fast. Now, when they don't sell mortgage-backed securities and treasuries back into the market, that means that there is less of a supply than what was expected based on the assumption of a certain take rate of quantitative tightening. And remember, quantitative tightening is selling assets into the market. Quantitative easing is buying assets from the market. So if they're lessening the quantitative tightening, then they're not extinguishing the money supply as fast. And the supply of those mortgage-backed securities or debt obligations or treasuries are less than what was expected. And when there's less supply of a particular asset, let's say 10-year treasuries or some types of mortgage-backed securities, if there's less of a supply, then there's actually going to be an increase in the price. And there's an increase in the price, then there's a decrease in the actual yield. So I think what's happening is that the Federal Reserve is trying to bring down the curve in the middle and the end of the curve by playing around with the actual titration of their quantitative tightening. And they're lessening, I think what's happening is they're lessening the actual amount that they're selling back into the market. So in essence, they're pulling back some of their quantitative tightening operations. So they're lowering the rate. So that's accommodative. And they're accommodative in the sense of lessening the amount of quantitative tightening. So hopefully that explains it a little bit better. So please go to my store, the-studio-reykjavik.com, and get the great supplements that I offer. And pay attention to my show that's live. And I also have it replay on the multiple channels that I have that goes over the market in real time and going over the breaking news. All of my broadcasts are for free. So help support the work by going to my store, the-studio-reykjavik.com, and getting the great supplements that I offer. Hopefully you've learned something about the complexity of the Treasury market and the Federal Reserve operations. It can be very complex, and pay attention to these movements so you can make some money. So thank you for listening and have a nice day.